Welcome to the deep dive. Our mission today, well, it's pretty focused. We're pulling back the curtain on those core system configuration secrets, the ones absolutely crucial for building a solid financial foundation. We're specifically looking at how system consultants make sure everything works right from the start, and we're basing this on the kind of knowledge needed for advanced certifications, particularly around Business Central. This isn't about vague ideas. We're talking brass tacks here, the essential know-how to prevent, well, data integrity disasters later on.
Exactly. This is where the theory, really hits the road in high-stakes implementations. We're discussing the specific settings, the toggles that let the system post transactions correctly, track expensive inventory accurately, and manage who can do what without losing control. It's really the foundation that decides if your financial reporting is smooth and automated or if you're stuck doing manual fixes every single month end.
Right. And just so everyone's on the same page, the material we're kind of digging through relates to the MB-800 certification. That's the exam. Proving a consultant gets this foundational stuff. It's pretty rigorous, multiple choice, case studies. It runs, what, about 120 minutes?
Yeah, somewhere around there, usually 40 to 60 questions, and you need that 700 out of 1,000 to pass. It's a serious validation.
Okay, let's unpack this then.
Yeah.
And I think we have to start with the absolute core. How does the system even know where the money goes? Automated financial posting, that's the heartbeat, isn't it?
It absolutely is, yeah. So let's take a really common business need. How do you automatically send sales revenue to different GL accounts just based on, say, who you sold to, not just what you sold?
The classic revenue stream separation.
Yeah.
Like a company wants its domestic sales hitting GL account 4100, their main revenue account.
Yeah.
But international sales, those need to go to a separate one, 4200, the foreign revenue account. Now, the first thought might be, okay, let's use the customer posting group for that, but that's too simple, right?
It is, yeah. Relying only on the customer posting group mainly defines which accounts receivable account gets used. It just doesn't give you that finer control to direct the actual revenue part based on the customer type.
Right.
We've definitely seen clients miss this. And the result, foreign sales revenue just gets dumped into domestic accounts for months. It becomes a huge headache come audit time.
Okay, so the critical insight here, the configuration secret, if you will, is you need a combination. A matrix using two different settings. The GenBus posting group and the GenProd posting group.
That's the key. Think of it like setting up a financial filter system. The general business posting group identifies the who is this customer, domestic, international, maybe retail. And then the general product posting group defines the product line or service being sold. Business Central then takes those two pieces of information
And uses the general posting setup page to connect them.
Exactly. It looks at that intersection. So if a transaction is, say, international customer from the business group and service line from the product group, the system knows precisely which GL counts to use for the revenue and the cost of goods sold for that specific combination.
So you're building this detailed map beforehand.
You are, and this setup directly impacts your financial reporting accuracy. It gives management and auditors instant visibility without needing, complex reports or manual journal entries later. Get this right on day one, and slicing your revenue by market is automatic. Get it wrong, and your monthly reports are basically flawed from the get-go.
That makes perfect sense. Building accuracy right into the system's logic. Okay, let's pivot a bit. We've talked revenue, now let's talk cost, specifically inventory cost. How do you handle precision for CoGS when prices are all over the place?
Oh, yeah. That's a big one, especially in industries with commodities or high-value electronics. Imagine you're selling specialized microchips. The market cost jumps around a lot. Maybe you bought a batch last month for $150 a chip, but this month they dropped to $100. The company selling those needs their cost of goods sold to reflect the exact cost of the specific chip they sold, not an average.
Right. Because if you use something common like average cost or even FIFO.
Yeah.
Well, FIFO might be closer, but average would just definitely smooth it out. If they sell that $150 chip, but the system costs it at an average of $125.
Their profit on that sale is wrong. It's overstated. And their inventory value is off too.
So for that kind of exact matching where every sale has to link back perfectly to its original purchase cost, what's the configuration choice you have to make?
You absolutely must select the specific costing method.
The specific, okay, that sounds powerful, but doesn't specific costing usually come with a lot more administrative work unless the item is like truly unique or serialized? What's the trade-off there?
That's a really important point. You're right, specific costing is more overhead unless it's truly necessary, but for this requirement, exact cost matching, it is necessary. The trade-off is control versus effort. When you choose specific, you're usually committing to tracking items much more closely, typically using lot numbers or serial numbers.
Ah, so it forces a process change.
Exactly. Every unit, or at least every batch, has to be tracked from the moment it comes in the door until the moment it goes out. This gives you that perfect transaction level profitability. But yeah, it adds steps to receiving, shipping, inventory counts. You wouldn't do it for, nuts and bolts.
Right.
But for a $10,000 piece of medical equipment, absolutely. The accuracy is worth the effort.
Got it. So choosing specific isn't just flipping a switch. It often means you must implement lot or serial tracking too to make the cost matching actually work. It guarantees accuracy where those cost swings could really impact the financials. Okay, so we've got revenue accuracy nailed down and cost precision covered. But, a perfectly configured system is kind of useless if people find it painful to use. Let's talk about user efficiency, tailoring the interface.
Yeah, this brings us nicely to role centers. Clutter is the absolute enemy for anyone doing transactional work day in, day out. Think about an accounts payable clerk. Their world revolves around vendor invoices, payment journals. They probably don't need to see sales dashboards or manufacturing capacity charts. They need a clean view focused on cash outflows.
And the source material points to a two-part approach for getting that AP user maximum efficiency. What are those two steps?
Well, the first step, kind of the baseline, is to assign them the standard bookkeeper role center. That immediately changes the layout, pushes payment tasks, financial pages, relevant cues right to the forefront.
Okay, so that gets them partway there. But what if even the standard bookkeeper profile has stuff they don't need? Or maybe they have some really unique, specific task they do constantly.
That's where the second step comes in. The consultant can create a new custom role center just for them, or for that role, and assign that instead. This is where you can really tailor it. You design a dashboard basically from scratch. Put in shortcuts to their most used pages, add specific charts they need, maybe some custom cues, and critically, hide everything else they don't need.
Can you give an example, like a specific chart or cue that really makes a difference for that AP person's day?
Oh, definitely. Instead of having them navigate through menus to find overdue invoices, you could put a custom queue right on their dashboard that says, maybe vendor invoices due in next 48 hours. Big, bold number. They click it, boom, they're straight into the payment journal, filtered for exactly those vendors. You've just saved them maybe 5-6 clicks, multiple times a day. It adds up fast. Role centers aren't just cosmetic changes. They directly boost speed, help reduce errors because there's less distraction, and just make the system feel more intuitive for their specific job.
Just improving efficiency by cutting out the visual noise? That's a great insight into user adoption, really.
Mm.
All right, let's wrap up our configuration deep dive with two absolutely critical steps for any successful go-live. Getting that initial data loaded correctly and then making sure business rules are enforced once things get going.
Okay, yeah. Data migration first, getting those opening balances in.
So picture this. We've done the reconciliation. We have the final agreed-upon balances for all our customers and vendors.
Right.
We need to get these big control totals posted into accounts receivable and accounts payable in the system quickly. Before go live, what are the go-to tools for this?
You'll typically use two main things here, the general journal and then customer and vendor opening balance configuration packages.
Okay, the general journal makes sense for speed, right?
Mm.
Just a quick entry to get those main AR and AP control account balances posted. Gives you that immediate high-level check.
Exactly, speed for the control totals. But you can't just stop there. Let's say your total AR is $500,000. That might be made up of balances from, 500 different customers. You can't manually enter 500 individual customer opening balances using the general journal. It would take forever and be error-prone. That's where the configuration packages come in.
Right, so what exactly is a configuration package in this context? How does it help with those 500 customers?
Think of it as a smart, structured data import template. It lets you prepare all that detailed subledger information, like all 500 individual customer names and their outstanding balances, typically in an Excel file. Then you use the configuration package tool to upload and post that bulk data directly into the customer ledger entries. It's the efficient way to load all that detail. And critically, it ensures that when your general ledger shows 500K in AR, the underlying customer ledger actually has the detailed records that add up to that $500. It bridges the gap between the summary control account and the necessary detail.
Gotcha, so it's a two-pronged attack. General journal for the fast posting of the main control totals, and configuration packages for the efficient bulk loading of all the supporting customer and vendor details. A solid approach. Okay, final configuration secret then. Enforcing internal rules. Let's say the company policy is strict. Any sales quote over $1,000 needs sign-off from the sales manager before it can become a real sales order. Can't rely on emails or memory. How do we build that rule right into the system?
That is a perfect scenario for using the workflow setup page in Business Central.
Workflow setup. Sounds potentially complex, but are you saying one place handles both the trigger condition and the resulting action?
It does, yeah. That's the beauty of it. On the workflow setup page, you define two key things very clearly. First, the workflow event. That's the trigger. In this case, it would be something like sales, quote, total amount exceeds $1,000. Second, you define the workflow response, what should happen when that event occurs. And that would be send an approval request to the sales manager user group.
And the system just handles it from there.
Yeah. Once configured, the system automatically monitors for that event. When a user tries to release a quote over $1,000, the system stops them and initiates that approval process. It ensures that policy is followed every single time without needing manual checks. It removes the human error element.
That really demonstrates how you translate a business policy directly into an automated, bulletproof system control.
Fantastic.
If just tweaking something seemingly simple like a role center can give an AP user such a productivity boost by clearing away the clutter, what hidden, maybe more specialized workflows are just sitting there inside the software you use every day, waiting to be automated or simplified? Finding those, that's where the real control lies.